I have been mentioning this for quite a while. We have almost $37 trillion in national debt. The national debt does nothing but grow. Every 100 days, it goes up by $1 trillion. Okay. And why is this happening? Well, that's because we're borrowing and spending. Our balance budgets are blown away. Washington loves spending money they don't have. And that's why we have the national debt, 36.5 trillion going on to 37 in another, probably 60 days or so. And it'll be 38 and it'll be 39. Yes, I do understand there's DOGE now, Department of Government Efficiency, with under Vivek and Elon. How could they, first they need to stop it as opposed to do anything else, stop it from growing, and then hopefully they'll cut it. I have a great video that came out yesterday, actually, that supposedly DOGE is already saving the U.S. government $1 billion a day. So, okay, well, it's $365 billion a year. How does that compare to $36.5 trillion? One. Two, the big deal with the $36.5 trillion national debt is that the Federal Reserve's hands are tied because of the broken fiscal policy. So the monetary policy is following. What do? They issue bonds. They have to, issue bonds. I mean, they have to close that budget gap, which is running at $2 trillion a year plus. Well, so Fed has been doing this. I mean, look, we've been in a zero interest rate policy for a long, long time, since 2008, actually, and then they pivoted, went to hiking rates because inflation showed up with a vengeance, and the only antidote to kill inflation is hiking interest rates, and they did, from 0 to 5.5%, and everything went up accordingly, right? Mortgage rates, car loans, everything else, credit card interest rates, they all went up. Well, now the Fed is on a pivot trying to lower interest rates, but it's not working out. The market's not buying it because they see inflation coming back. And sure enough, on Wednesday, we had a horrible, horrible CPI, but the market did not care. The dip was bought. But the point I'm trying to make is, out of this $36.5 trillion in debt, and out of $36.5 trillion in debt, we have interest payments. These are IOUs. Okay, these are notes, bonds being 30 years, notes 10 years, less than 10 years, T-bills. We have to issue debt constantly. Well, when we're issuing debt, the other thing we have is, besides the new debt we're issuing at much higher interest rates than when we had zero interest rate policy, there are bonds that are maturing every single day into the billions, and so they have to get replaced with new debt. And the new debt's interest rate is extremely high now. I mean, on average, we're up to 3.5%. And every single year now, well, in 2024 anyway, the interest servicing cost on this debt was $1.2 trillion. Okay, just the interest cost. And, well, looking at our defense budget, is almost double our defense budget, or 1.5 times our defense budget, or Social Security. That money is basically put on fire, right? The interest, we're just paying interest, just like you're paying interest on a mortgage or interest on a car loan. The Fed, the U.S. government is paying interest because they're issuing these IOUs. And so the new IOUs that are being issued are the ones that were issued at much lower interest rates when we had zero interest rate policy. Well, now what we have is, I saw this tweet, and I agree with it completely. So the United States has $66 billion in 10-year bonds from February 2015 coming due tomorrow. Okay. It had a 2% fixed coupon. All right. It is going to be replaced with another $66 billion 10-year bond, but this time with a 4.55 fixed coupon. Now you guys understand why the interest cost on the $36 trillion debt is going up, astronomically. This one single rollover will add an extra $1.67 billion per year to the national debt for the next 10 years. Bond auctions like these are happening every single day. Absolutely, they are. And we're just beginning to pay the price for a decade of ZIRP. ZIRP meaning zero interest rate policy. All of that debt now costs taxpayer money. Absolutely. And just wait for the 2032, 2035 vintages, when We're paying 5% for all the debt we took out when we had 4% unemployment and 3% GDP. So what is happening is that these new, not only we're issuing new debt because we're increasing the national debt by $1 trillion every 100 days, the replacement cost, right? The new interest rates that we have to pay these note holders or bond holders, the IOU holders, is going double. And so now the interest rate is going to exponentially go up from 2s or low 2s to high 4s. So we're doubling our interest cost and we're increasing the national debt at the same time. So what's going to happen? I mean, look, the madness has to end at some point. And according to Spencer Hakimian, this, he was saying gold for risk off. Well, we know what's happening to gold, right? A new all-time highs. Why? Bitcoin for risk on. Bitcoin is just going sideways between 95 and 105 until it breaks out and goes to 150,000 next time up. It happened the same way, about 4 months ago, right? It went sideways for 6 months last year, and then it broke out, went from 50,000 to 100,000. Look, people must understand this. Under circumstances like this, all of us need to save in harder assets. What are hard assets? Obviously stocks. That's why stocks are benefiting from that as well. Stocks at all-time high, gold at all-time high, real estate at all-time high, Bitcoin at all-time high. It's all because of our monetary and fiscal policy that's being broken. And I am sure at some point, this is going to hurt bad. And when, I don't know. But we just can't keep kicking the can down the road and expect good things to happen. Granted, market's not paying any attention to any of this yet. When I would say market, the stock market, the bond market's paying attention.